What in the world is happening with silver? One day it's soaring, the next it's being dumped in a historic sell-off. If you've been watching the charts, you know the past week has been an absolute roller coaster. It's enough to make you wonder if this is even a real market anymore. Let's break down what just happened, why it's so significant, and what it means for you. We just witnessed one of the most brutal one-day collapses in silver's history, reminiscent of the chaos back in 1980. The price plunged by a staggering 30%. Imagine that. 30% gone in a flash. Gold wasn't spared either, suffering its own steep drop. The charts looked like a cliff dive. Panic was in the air, and for a moment, it seemed like the floor had completely fallen out from under the precious metals market. Many are calling this a coordinated takedown, a deliberate move by big players to shake out the small guys and crush the growing momentum. When you see a drop that sharp and that fast, it's hard not to be suspicious. It doesn't look like natural price discovery. It feels artificial, like a switch was flipped. This wasn't just a bad day, this was a statement. The message was clear. They are still in control, and they can and will dump silver to manipulate the price whenever they see fit. But then, something just as dramatic happened. Right when it seemed like all hope was lost, the market roared back. On Tuesday, February 3, 2026, we saw a massive rebound. Spot gold surged by nearly 4%, climbing back over $4,770 an ounce. Silver, after its brutal plunge, also found its footing and began to climb again. Buyers who had been waiting on the sidelines saw the dip as a massive discount and rushed back in. So, what does this tell us? Analysts are quick to point out that these wild swings were driven more by short-term market dynamics and positioning rather than a fundamental change in the long-term story for precious metals. In other words, this wasn't about the real-world value of gold and silver suddenly disappearing. This was about financial maneuvering, options expiring, and powerful entities flexing their muscles in the paper markets. Let's dig into that a little deeper. The paper market for silver, which includes futures contracts and ETFs, is many, many times larger than the actual physical supply of silver available on the planet. This creates a massive disconnect. A few powerful players can trade huge volumes of these paper contracts to drive the price down, even if demand for physical silver coins and bars is going through the roof. And that's exactly what we're seeing. While the paper price was getting hammered, dealers of physical silver were reporting unprecedented demand. They couldn't keep coins and bars in stock. Premiums over the spot price were skyrocketing. This is the great paradox of the silver market. The price on your screen can be falling while people are lining up to buy the real, physical thing at a higher and higher cost. This recent episode proves that the paper market is a distorted reality. It's not a true reflection of supply and demand in the physical world. The dumping of silver we saw was a classic example of this manipulation. They can create and sell as many paper contracts as they want, flooding the market and creating the illusion of weakness, even when the physical market is tighter than ever. Despite this extreme volatility, the fundamental reasons to own gold and silver haven't changed. In fact, they might be stronger than ever. The core drivers are still firmly in place. We're talking about the ongoing debasement of currencies, persistent inflation, geopolitical instability, and a global move away from the dollar. These are not short-term trends, they are long-term structural shifts. Precious metals have always been the ultimate safe haven asset. When people lose faith in paper money and financial systems, they turn to something real, something tangible, something that has held its value for thousands of years. The recent volatility doesn't change that. It only highlights the fragility of the paper-based financial system we live in. The rebound we saw is incredibly bullish. It shows that there is a strong floor of support for these metals. The manipulators can push the price down, but they can't keep it there. Why? Because smart money and everyday people understand the long-term value. They see these manufactured dips not as a reason to panic, but as a golden, or in this case, silver opportunity to buy. They are effectively calling the bluff of the big banks and institutions. This battle between the paper market and the physical market is reaching a boiling point. Every time they try to suppress the price with paper contracts, they just encourage more people to take delivery of physical metal. This drains the physical supply from the vaults, making the system even more fragile. Eventually, there won't be enough physical metal to back up all the paper claims, and that's when the real price discovery will happen. We're not there yet, but events like these are pushing us closer to that day. So, what's the takeaway from all this chaos? First, don't let the short-term volatility scare you out of your position. Understand that these price swings are often the result of games being played in the paper markets and have little to do with the fundamental value of physical metal. Second, recognize that these manufactured dips can be incredible buying opportunities if you're long-term. Conviction remains strong. The fact that the price bounced back so hard shows the underlying strength and demand. The narrative that this is not a real market anymore is gaining traction for a reason. When an asset's price can be artificially crashed by 30% in a single day, despite overwhelming physical demand, it's clear that the market is broken. It's not functioning as a true mechanism for price discovery. But this brokenness also creates opportunity for those who understand what's really going on. The long-term case for silver and gold remains intact. The demand for a safe haven, for real money, is only growing. The recent price action, as jarring as it was ultimately a temporary distortion. The fundamental drivers are what matter, and they are all pointing towards higher prices in the long run. Don't let the noise of the paper market distract you from the signal of the physical market. The story is far from over. Thank you for watching. If you found this breakdown helpful, make sure to like this video and subscribe to the channel for more updates on the precious metals market. Hit that notification bell so you don't miss our next analysis. Stay informed and stay prepared. We'll see you in the next one.